case you're worried about whether foreign trips are going to cost more, whether there's going to be a new tax on your credit card, how is it going to impact you? There is a new government scheme. How much do you lose? Can you actually get a little bit of a refund when you file your taxes at the end of the year? We're going to have a fantastic discussion with a great panel who are experts. They travel abroad a lot. They're tax experts as well. And they look at the travel industry also very, very closely. But first, this report from my colleague, Priyanshi.
Well, Vishnu, there are several questions that people have over this new tax. So let's understand what has changed and how it impacts you. So with this new tax, essentially, you will have to pay a 20% tax on all international credit card transactions from the 1st of July. Now, this is a tax collected at source. So it means that when you swipe a credit card in a foreign country, a 20% tax will be deducted. Earlier, international credit card transactions were not taxed, but now they will be taxed at source as they now come under the RBI's liberalized remittance scheme, or the LRS. Naturally, this will make foreign trips and shopping via credit cards more expensive. So for example, if you're making a 2 lakh rupee purchase, you will have to pay a tax of 40,000 rupees. The government says that the main impact will only be on investment in assets such as real estate, bonds and stock payments outside India by high net worth people using their credit cards for these transactions, and it will also impact tour and travel packages, making them more expensive. And because these transactions come under LRS now, this also means that any remittance over $250,000 will need an approval from the Reserve Bank of India. Several travel companies and travelers have criticized this move, saying that it will make foreign travel even more expensive, while some welcomed it. India's second largest online travel agency, Ease My Trip, in a statement to NDTV, said that this will make travelers opt for domestic travel instead of international trips. Now, you must have several questions even now. The government has answered FAQs of frequently asked questions. Number one, will this be an added burden, and can the tax credit be claimed? The government has said that this is not a final tax, and a taxpayer can claim credit for this tax payment in the regular income tax return, or ITR filing. Experts also say that this tax won't be lost money for those who already pay an income tax, as they can adjust this tax for their tax liability for that year. But those who don't pay an income tax, they won't be able to make a claim, and they will be impacted by this. Now, the second question is, will this make foreign education and medical treatments more expensive? The government says there will be no change in international education and medical expenses. They already have a 5% TCS, or tax collected at source, above transactions over 7 lakh rupees, and that doesn't change. So essentially, students won't have to pay this tax on their tuition fee payments, but they will have to pay this for, let's say, shopping and food bills that they pay via credit cards while living abroad. Now, another important question: why did the government really raise this tax? The Finance Ministry said that transactions above $250,000 are being made via credit cards without any approval, and they have to have checks on these high-value transactions. It said that debit card transactions already come under these norms, and the move is aimed to remove that differential treatment between debit and credit cards. It also said that disproportionately high payments are being made when compared to disclosed incomes of several individuals, which indicated tax evasion and money laundering. So these are the major reasons for the move. It's essentially imposed to keep a check on high value foreign payments to prevent tax evasion, but it will make foreign travel more expensive for many.
All right, Priyanshi, thanks for making it that much simpler for me to understand this. Thanks very much indeed. Madan Sabnavis, Chief Economist at the Bank of Baroda, joins us. Sunil Badala, Partner and National Head of BFSI Tax at KPMG, also with us. Subhash Garg, the former Finance Secretary. We're also joined by Mohit Kabra, the CFO of MakeMyTrip.com. Mohit, let me come to you first. Do you believe it's going to discourage people from traveling abroad? Mohit, I think you're on mute. Can you unmute yourself?
Yeah, thanks. Like Priyanshi covered it, this is not necessarily going to be an incremental burden. This is more a levy, and the credit will be immediately available from an IT returns filing point of view or in your 26 AS. And therefore, this can be adjusted against tax payments due, or eventually a refund can be claimed if the amount of tax deducted is higher than the tax liability for the SSE. So it's going to be more a cash flow issue, not necessarily an incremental cost. And the other part is, like she called out, the TCS levy. The customers usually have different modes of payment, whether it's a debit card or it's a credit card. Until now, credit card payments were enjoying, the benefit of being kept out of the LRS ambit. And I think government has removed that anomaly so that, across payment modes, the levy is the same. It should not be the case that somebody paying through a debit card undergoes a 20% TCS, but the same person paying through credit cards doesn't see a 20% TCS being collected. So I think that anomaly has been removed, and it will also help provide a level playing field between bookings being made on domestic platforms or through domestic agents versus international agents. So that's probably the other reason that this was more appropriate to bring in the credit cards on the ambit as well.
So Mohit, you don't expect this to have an impact on people traveling outside? Let me give you a couple of examples on how it might be a problem. Number one, if I am abroad and I need to buy tickets for me and my family, then if I am paying a tax of 40,000 rupees on a 2 lakh rupee payment, then for a family of 4, you end up paying a huge amount, right? So A, it is a cash flow issue. B, if there is somebody who's not in the tax bracket at all, a retired person, maybe not been filing taxes, if they do manage to travel abroad and they use their credit card, then they can't that money is not refunded to them. So I can think of a couple of examples on how this might be a real pain.
No, I agree with you that there is a little bit of a pain because it means incremental kind of outgo right at the beginning for the customers, and therefore what I'm trying to call out more importantly is that bringing the credit card under the ambit is not necessarily an incremental burden. Whether the TCS should be at 20% or can it be at a lower percentage, particularly for those who are kind of already PAN card holders, have been filing their returns, that's a different argument altogether. So okay. I completely buy your point on that can the percentage of levy, like say for instance, until now, this levy was at about 5% and with a lot of exemptions, right? And therefore, in many cases, the TCS levy was not happening.
So from 5% to 20% is colossally large.
Exactly.
It's huge.
No, clearly. So therefore, the incremental outgo right upfront is going to increase, and that's probably going to kind of also, get a lot of people to look at possibly domestic holidays rather than international holidays. We have been seeing that trend, over the last, since the introduction of the 5% itself.
Okay, Mohit, just hang on a second. I wanted to go across to my other panelists as well.
Sure.
Sunil Badala, just a question because people are writing in, lots of interest in this. If you use a debit card and you use it abroad, or if you use a Forex card, will you be taxed?
Yeah, I think, debit card is already covered. And of course, even the Forex card, if you are using it, they are all going to be forming part of LRS limit of $250,000, and therefore there will be a TCS. See, we have to understand.
If you're under $250,000 and you're not using your credit card and are using a Forex card or an international debit card abroad, will you be paying 20%?
Yes. So whether you pay debit card, whether you pay through debit card, whether you pay through Forex card, or whether you pay through credit card, all of them will be subject to a TCS of 20%. What I was trying to tell you was that, see, the limit of $250,000 hitherto did not include any amount that you spent through credit card because there was a specific exemption under FEMA, which now has been rectified and which now has been amended, and therefore the spend on credit card will also be within the limit of $250,000. But as far as TCS is concerned, it is directly linked to any remittance or any spend under LRS. And all of these expenses which you do through debit card or Forex card or credit card will be under LRS, and therefore there will be a TCS.
Madan Sabnavis, what happens if you use travelers checks? People have gone off travelers checks after Forex cards emerged, but if you have a traveler's check and you encash it abroad, how are you going to be taxed?
No, in fact, I think we don't really have clarity on that because you're talking
As you
about
can
travel
see,
aspects.
Madan, I'm looking for ways out of in the eventuality that I travel abroad.
No, I think there's also the case that you can do when you're buying your tickets, you do it through NEFT, in which case you're not in the realm of cards, and therefore you should ideally not be taxed. And as you're talking of traveler's checks, since I'm buying but I think when you're buying traveler's checks, you're buying for, say, $100 or $1,000, in which case there will be a TCS. So I think when you do an NEFT transfer, that could probably be an escape clause which you have here. But I think that bringing it under LRS definitely makes sense. But I think TCS actually, to my mind, is not really a very good idea, because especially if I can claim it, then what is the big idea of having a TCS of 20%, which I'm going to claim after 1 year when I'm filing my returns? If the idea was only to capture all the people who are spending too much, I think you can always get it directly from the banks and the credit card companies. So to my mind, this part is going to be onerous. It may not really cost much, but as we said in the beginning, we will have to put forward a lot more cash to begin with when we are undertaking any of these forex transactions. This is something which could have been avoided. Because
Madan, this is an interesting point. If I wanted to make a purchase and I go through the NEFT process, which is time consuming, then I may not be taxed, right? So if I buy something abroad, I transfer to that person's bank directly, I wouldn't be taxed. Is that what you're saying, at 20%?
Yeah, exactly. So if you're talking of NEFT, that's not been mentioned, because they're talking only in terms of credit cards coming in the LRS. And as of now, when I went for a travel journey and I made my payment through an NEFT transfer to, say, on Ease My Trip, I would not be paid. There would not be any tax which are charged. I think there could be a clarification by Mr. Kabra on this, that if I'm right on that.
We shouldn't give them any ideas at this stage. They might just tax that as well. Mr. Subhash Garg, how do you see, 20% on a 2 lakh payment, you're paying 40,000 rupees. That's absolutely huge.
So number one, you're not paying, but what actually this means is that the ease of living, ease of doing traveling, etc., is being sort of so much made more difficult. I don't know why the government has done it. There was no reason. All credit card expenditure was in any case reported earlier. Likewise, all foreign travel was also reported earlier. So putting a 20% tax collection, not a tax, because tax is paid on the income which you earn, not on the expenditure you make, and therefore putting this 20% and making people take it refund later on is whole lot of unnecessary inconvenience to a lot of people. I don't know whether the government will end up getting anything out of it, because in my judgment, everyone would probably reclaim it after going through this hellish process. It seems to be a completely unnecessary and wasteful measure.
Sunil, let me come back to you. A large number of people in this country study abroad, and tuition and etc. may not be covered in the tax. The government has clarified that, but living expenses are substantial, and there are foreign remittances to ensure that students abroad are actually paid, and so the parents or whoever is paying ends up paying 20% for that. So that is a huge outgo of money, because it's not just 20,000 rupees or so. It could be, depending where they live or where they study, a lot more. So the cash out is a lot more.
Yes, so you are right. So as far as education and medical expenses are concerned, obviously the rate is not 20%. There's a threshold of 7 lakh rupees, and also the rate applicable is 5%. Also, they've said that they will come up with a detailed clarification wherein they will actually also articulate as to what are the incidental expenses relating to education and medical, which will be subject to a lower TCS rate. But having said that, you are absolutely right. So, for example, if you have, let's say, you have sent out of pocket remittances to your children, and if that doesn't form part of incidental expenses relating to education, then yes, there is a 20% TCS. What seems to be happening here is that maybe there were few cases which government has has come to know, where under the garb of remitting to the children, people have obviously gone overboard, remitted huge amount of funds, and created wealth outside of India by investing or by purchasing property or whatever else. So maybe to actually address some of those actions which very few people would have done, this is a law which is now going to be applicable to all the people, including those who are actually now, who are actually genuinely sending this kind of remittances to their children. So yes, you're right. Unfortunate part is that you are going to pay 20% TCS.
Mr. Garg, how does one reclaim this at the end of the year, the financial year, or whenever when you pay your taxes? You're going to give like paperwork to the government, to the tax department, that here are our bills. I travelled abroad and here are 75 bills. These are all incidental expenses. Now you please give me this money back.
No. That is not very difficult. The process is relatively simpler. Now all your taxes are counted as part of your 26 statement AS, and whatever you are paying gets all included, and therefore that is not a very difficult proposition. It automatically will be part of your tax paid, and TDS deducted or TCS deducted. And if your liability which gets counted is smaller, then the refund will automatically come. So that's not a huge problem. The problem is of the cash flows. You would remain out of cash for quite some time, and you would need to get much more amount for remittance and paying to the tax department at the time when you incur the expenditure. So claiming expenditure or extra tax deducted shouldn't be a major problem, except that ease of convenience, as I said, is the problem.
Mr. Garg, it seems that you are abroad. Make sure you come back by the 1st of July. Otherwise, if you use your credit card, God knows how much you'll rack up.
Don't worry about it.
All right.
Okay.
Mohit, any other concerns? The aviation sector is just about coming around in our country. We're doing quite well now, by and large. If travelers are now inconvenienced, isn't that going to have a knock-on effect?
Definitely. See, it's going to have a little bit of an impact, particularly in the initial few months, right? It's going to look a much larger outlay, and therefore the sentiment, particularly on overseas travel, is going to come down. Like I said, it's a given. And the other thing is, I think the government has looked at it from 2 points of views. One, they have been trying to promote, more domestic travel rather than overseas travel. And the second, they've been trying to capture, like was pointed out, those cases where the income disclosed is kind of not in line with the kind of expenses being incurred on overseas travel, right? And therefore, they're trying to kind of capture this. And the third element was, if you see, even currently, there's a 5% levy. It's just that currently on the 5% TCS levy on travel, international travel or overseas travel, credit cards were exempted.
Yeah.
And as a result of that, whenever, customers were booking or making those, overseas bookings, particularly on overseas platforms or directly with the overseas hotels, right? This 5% TCS was not getting levied, while if they were making it on the domestic, with the domestic travel agents, the domestic travel agents were having to kind of pick this 5% additionally, because they would not be allowed to remit it back to the supplier without the 5% TCS being kind of, showcased to the bank, in terms of an virus remittance. So it was creating a non-level playing field. So therefore, the government has done one thing that they've done right is they've brought credit cards in line with the other modes of payment. And therefore, across modes of payment now, the TCS levy will be constant or consistent. And that makes complete sense. We can always argue whether the TCS rate should have been as high as 20% or it could have continued at about 5%, because even at 5%, you get the full information around the nature of expense being incurred. And you don't necessarily need to kind of collect a much larger amount right upfront. So that's probably the only point. And I think the only other point left from a travel industry point of view, or particularly the domestic travel industry point of view, is the mechanics of how this TCS will be collected. I think what the domestic industry is also lobbying is that ideally it is the bank, which is the card issuing bank, whether it is a debit card or a credit card, the customer's card issuing bank should be doing the TCS collection. So that, see, because the customer has 3 or 4 ways of making a transaction, right? He could either book it with a domestic agent, or he could book it with an overseas agent, or he can book it directly with the overseas hotel or service provider. What happens is, in the current mechanism or in the current process, when he books it with the domestic guys, the TCS has to be paid right upfront to the domestic platforms because they have to deposit it in turn.
Right.
Whereas when they book it with the overseas guys, the TCS is not levied immediately. So therefore, optically, you see a $100 booking looking like $120 or $105 currently on domestic platforms versus looking like $100 on overseas platforms. So ideally, what the domestic travel industry is kind of requesting is that the bank which has issued the card should centrally kind of deposit or collect TCS across modes of booking, whether it is with domestic agents or with international agents, so that there is no disparity between the platforms.
Between the two.
Therefore, there is
Mohit, we'll leave it over there. I take your point. Lots to discuss over here, but it is an inconvenience. I think that seems to be quite clear, and I think there needs to be many more clarifications from the government on how this is actually going to happen, the process of seeking a refund and who can actually do that, because it is an inconvenience for honest taxpayers to see so much more of their money going for a measure which has been taken to apparently target those who are using the existing system unfairly.